What's going on, everybody? Welcome to Liberate Your Money, episode 50. 50 episodes, guys. I've been doing this since 2019. I just want to thank everybody that's watched. I didn't really do this video to gain followers or, monetize it in any way. This helps me reflect on how I feel about the markets, and then I feel like it's useful. Since I've been here for one cycle, I feel like my point of view can be useful to the newcomers that have been asking me about the space and getting involved in the space. So I started this podcast, and I just want to thank everybody that has watched any or all of my videos. It's been a crazy year, crazy bull run. I think, for me personally, I played it pretty well. Did very well, paid off a lot of debts. Still hold a lot of crypto and feel really good about the future of crypto, even though I think that we're probably near or close to the end of this bull cycle. As you can see, guys, the Fear and Greed Index is pretty brutal. Generally speaking, when it's been this bad, we've either been in a bear market or it's been a really good time to buy. And we're 40% off the highs for Bitcoin, which historically has been a good place to buy. You can see that we're kind of at an inflection point for the price. It's like at the mid. If we look at this other chart, I've got this range mapped out. And as you can see, we are at the mid range. We're at the top of the previous consolidation range. So, I don't think it's a good place to short. I think it favors the longs here if you're looking for a short-term swing up to maybe 45K. But beyond that, who knows? Weekly cloud. This is the weekly chart. As you can see, last video we were above the mean, which is the red line. Now we're in the cloud. So if the week closes tomorrow in the cloud, it invites the bottom of the cloud, an edge-to-edge trade, which is 34.4K, which kind of lines up with this bottom consolidation range with the range that we just talked about, right? So maybe we bounce here, or back up to the range, and then I'm highly doubting that one. But I'm thinking that we'll probably either bounce up here and then get rejected and eventually go to these lows. Then from here, Bitcoin likes to breach necklines and then fake out. So I could totally see a cascading event down, and then we immediately get back into the range. And then, maybe just keep doing this range thing until we can create a solid base and make our way up where they turn the printers back on and all of a sudden we start making new highs. I don't know what's going to happen. I've been reading a lot of end of the year reviews from people that I think are smarter than me. I think it's a good habit to get into to make sure that you don't fall into your own biases. And if you guys don't know who Arthur Hayes is, he came out with another blog post. He was the creator of BitMEX exchange, first 100x exchange. Just an absolute savage in the space, but he's got this Medium article, and he basically talks about how he thinks there's going to be at least three crazy liquidation events like we saw on March 2020, which is really fucking scary to think about, because that was a crazy washout where we saw price go from 13K down to 3K in a matter of days. So, and his reasoning behind that is he goes into interest rates, and he goes into how, when everyone's looking for the exit and you get these liquidation events, it really creates some hellish sell pressure on the markets. And he believes that the Fed actions, because the Democrats are in a tight space, they're the ones that are in control right now. They've got elections in November this year, so it creates this pickle for them where you're dealing with high inflation. You want the Fed to scale back, but you also don't want markets to tank before midterms, because then that makes you look bad. And So they're kind of in a pickle right now, and basically Arthur thinks that eventually it just means that, there's a lot of downside risk ahead of us, and he could easily see some cascading events to the downside, maybe even see Bitcoin around that 20K level, or even Ethereum below 2K. And which is scary to think about, guys, but look, in bear markets, that's the type of price action you see. And if we are indeed entering a bear market with the Fed actions, with the timing of the Bitcoin halving, we're 2 years into this bull cycle, so the halving was in 2020. It's probably time to cool off a little bit, right? We've been talking about that for the past few weeks now, and he basically confirmed my thesis already. I didn't think it was going to get that bad as far as 3 washouts compared to March 2020. I hope we don't get something like that, but I'm making sure that I've got fresh powder on the sidelines ready to buy the dip, because like he says in this article, fortunes are made when you have the capital to buy crazy unexpected events like that. And look, if you bought the dip in March 2020, I had a little bit of powder. I bought around 7K and 8K when it was on its way back up, but when it was going down, I was man, I remember I had no fresh powder at the time. I was trying to get money onto the exchanges, so I had money to buy the dip, and by the time the money got there, price was already doubled what it was. And so I'm going to be making sure that I have that cash on the sidelines. I'm going to be ready to buy the dip if we do get these crazy price swings that Arthur Hayes thinks that we're probably going to get. Another market outlook write-up that I think you guys should check out, and I will post these links in the comments so you guys can check it out real quick. Charles Edwards, I follow him on Twitter. He's got an investment firm, and he puts his bull cycle in review, and he's got a lot of the same sentiment. He basically says that a lot of the on-chain metrics are kind of conflicting right now. There's a lot of bearish ones, but then there's also the same amount of bullish ones, meaning these metrics that are saying that there's not very many crypto on exchanges, which generally means that people aren't looking to sell it, because if they're on exchanges, they would be either having their orders ready to sell, but that's not a very good metric these days, because a lot of the larger transactions happen off-chain, so aren't happening on these exchanges. So it's not necessarily a good metric, but he talks about a few of the metrics for both sides of the case, bullish and bearish, and I think it's a good write-up. I think they're also playing it cautious as far as the outlook for this year because of the Fed actions and the uncertainty. They think that there's going to be a high volatility in the next year, which coincides with Arthur and his thesis for the next year. So look, that honestly lines up with what our thesis has been for the past few weeks. Look, we've been taking profits, we've been scaling back our altcoins, and now we've got fresh powder to buy these dips, and we just got to be patient, right? So I'll link these in the description. I did want to talk more about the people that just got into the space. They probably bought somewhere near the top. They're either down on their positions, or they're looking to buy the dip because they don't have that much exposure. And look, I remember being in that spot. I got in at the 2017 cycle and made a little money and thought this thing was going to keep going up forever, but in reality, we had been in a bull cycle for 2 years, just like here, and little did I know that the bear market was right around the corner. And I was averaging down on altcoins that I believed in and buying more Bitcoin, and before I knew it, my portfolio was so down because the next 2 years it was just excruciating chop to the downside. And my belief didn't waver in the system. I knew that I studied the Bitcoin chart. I started studying the cycles, realized how dumb it was to get in at the top of 2018, and now I got them same vibes. And now that I got this podcast and my friends are trying to get involved in the space, and I see they're going through that same cycle that I did, where they're getting in towards the top of the cycle, and it's just it's a really scary place to be averaging in and continually buying down, when I think what you probably want to do, or in hindsight are going to look at and be like, damn, I wish I did this, is probably going to be like, I wish I would have stacked cheddar and just waited. And, you know, once that bear market liquidation cascade event, like something like this happens where we get like a dip into the 20Ks, I had that cash available and I was ready to buy the dip for the next cycle. Like, that's what I think people's focus should be. I think this stage of the cycle is great for developers and builders. You know, they can stop focusing on price and price action of their asset, and they can start digging into the meat of their projects. And we're going to find out which ones are going to survive. We're going to find out which ones communities stick around. And it's going to give all this metaverse and all these gaming and NFT ecosystems time to build and just like really focus on their projects. And then it'll also give you time to sharpen your edge and figure out how you're going to play the next cycle and how you're going to better play it the way, you know, better play it more than you did this cycle. That's kind of how I'm thinking about it. Like, I made a lot of money, but I could have made way more. I'm not perfect. I made a lot of mistakes that I wish I could have made, or that I wish I wouldn't have made. So, like, we can always get better, and I think that we're entering that time period where you really just got to maybe scale back on the buying and scale in on the just like learning, diving into these projects. You know, start using some of this stuff. Download the Capriole wallet, download the Phantom wallet, download MetaMask. Like, get a feel for all these ecosystems, and then from there you're going to be able to make more informed decisions, because like you'll have used a lot of the products. You'll have that crypto experience with decentralized wallets and decentralized exchanges. Make sure you're familiar with all that stuff. Look into privacy coins. You know, why is crypto privacy important? Like, if you look at what central banks and the CBDC talk is about, like, that's, you need to understand why Bitcoin's important, you know, from that perspective. Because if we have to choose between a CBDC and Bitcoin, you want to be able to explain to your loved ones why we need to choose Bitcoin. Because if we go the CBDC route, basically your privacy's gone and your life belongs to the federal government. They can shut you off at any time. If they have a central bank digital currency, they can black flag your wallet. You can no longer transact in society. Like, that's a pretty fucking scary authoritarian place to be. And they're already talking about it. So, you know, it's coming. That conversation where we choose between Bitcoin, a decentralized currency, and a completely centralized currency where people that are in charge of that currency can just shut you off, that becomes a very, very, very important conversation. So yeah, guys, I mean, maybe we just chop in this range. I think it's a great time to just stack cash, wait for crazy buying dips, crazy dips to buy them. Like, they're coming. They're going to be there. If we do get higher interest rates, if we, you know, if look at the stock market. Like, the stock market's not even down that much. It's only down like 3%. When was the last time that stock market came down and touched the mean? Look how far away it is from the mean. It's so far away. It's at least 10% away from the mean. And if the stock market takes a 10% hit, like, what's going to happen to crypto? I mean, you can see crypto's been front-running stocks. Risk assets have been front-running stocks. This crazy volatility up here, I think, you know, it's not good. I think we could see. But then again, like, this is an election year, so like that's brings us back to that conversation where, what are the Democrats going to do? How are they going to inform the Fed to take certain actions to keep the stock market high while keeping inflation under control? I don't know how they're going to do that. So I don't know. I really don't know what's going to happen, guys. I'm more bearish. I think we're towards the end of the cycle, and I think the stock market needs a nice pullback to the mean. I think this is a great time to learn. It's a great time to dive into crypto, the meat and the guts. Figure out why you like projects. Figure out which projects could be better next cycle, or could be the next crypto thesis next cycle. Like, I don't know if that's metaverse or NFT games, or like, I don't know. I'm diving into it myself. Be cautious, guys. Don't be sad that it's over. Be happy that it happened, right? The bros that were saying that the halving was priced in, I'm sorry, but this cycle proved them wrong once again. This is price action since the halving in 2020. Catch you guys in the next video. Stay safe.